Hey guys, it is Julie here with JT.Wealth. In today's video, we are going over Elon Musk's recent statements surrounding the future of Tesla's stock price. And we're also covering all of the reasons that we agree with him. So let's get into it. All right, guys, welcome back and thank you so much for being here. In today's video, we have a lot of great Tesla information to cover. We're starting out with both the stock market and Elon Musk's reaction to Battery Day, also some future outlooks that Elon has for Tesla, as well as some big new orders and partnerships in their future. So before we jump right into all of that good stuff, this is just your friendly reminder to please make sure that you are subscribed to the channel. And if you like the video, make sure to hit that big thumbs up button too. Okay, so last week on September 22nd was the highly anticipated Battery Day presentation where Elon Musk himself was presenting on advancements in Tesla's technology and outlooks for the future. There was a lot of excitement for this day as Elon Musk said it is going to be big and it was going to be insane, so expectations were high. Leading up to Battery Day, we saw the Tesla stock price around $449. But after the presentation, we then saw it take about a $70 loss, down almost 15% to $380 by the 23rd. So what happened? Well, in a recent interview on Kara Swisher's Sway podcast, Elon Musk shared his thoughts. He said that smart people on Wall Street have usually not the faintest clue about manufacturing and how difficult it is. They think that once you've come up with a prototype, well, that's the hard part and everything else is trivial, copying after that. It is not. That is perhaps 1% of the problem. Large-scale manufacturing, especially of new technology, is somewhere between 1,000% and 10,000% harder than the prototype. I would really regard at this point prototypes are a trivial joke. The press coverage of this event was sad. When Kara Swisher pressed on why, Elon responded that most of the press's takeaway was that there was no battery. Elon said it is a sad reflection of their understanding, really. When asked to explain, he said, I'll try, but I'm also not trying to convince people that much. The results will speak for themselves. The cells we're talking about, we have produced many of them. We have had cars driving with those cells since May. So Battery Day did include a lot of very positive, forward-looking developments for Tesla. I think the problem just was they were a little too forward-looking, and Wall Street was really wanting some impact in the right here and now. But in the week following Tesla's Battery Day, we've heard a few more pieces of news that have helped restoke some of that excitement and confidence in Tesla's stock. Since then, from an opening low of $364 on Thursday the 24th, we've seen a climb of about 16%, back up around the $423 mark. And so in this video, we are going to go over the reasons behind this. Now, there was one statement from Elon Musk that got everybody talking. And that's when he said, I think some critical mass of the market has concluded that Tesla will win, I guess. I've gone on record already saying I think the stock price is a bit high. That was well before its current level. But if you also ask me, do I think Tesla will be worth more than this in 5 years? I think the answer is yes. One exciting piece to watch for in this next week is Tesla having a shot at breaking their record on vehicle deliveries. They are expected to report their third quarter vehicle deliveries sometimes during the first few days of October, and a record-breaking quarter would likely have a big impact on Tesla stock. Tesla is expected to deliver about 141,000 cars in the third quarter of 2020 and 483,000 cars for the full year. That amounts to about 30% growth compared with 2019, an impressive achievement given the global pandemic. Ford Motor sales, for comparison, are expected to dip about 20% in 2020. On Monday, Elon Musk also tweeted that he thinks his company might sell about 20 million cars by the year 2027 or 2030, and expects there to be about 30 million cars worth of sales in the industry as a whole. Now, that 20 million vehicle goal works out to about 40 times the current production of Tesla and equates to roughly an average annual growth rate of 70%. But there is precedent for this goal. Tesla has increased their deliveries by 100% per year from the 7 years spanning 2012 to 2019. So based on those numbers, that goal is not out of reach. Now, in additional exciting Tesla news, this morning we just saw headlines stating that Walmart Canada has put in an order for 130 of Tesla's electric semi-trucks, making it one of the largest reservations for electrified trucks in the country. And comes on the heels of Walmart Canada announcing a major $3.5 billion investment over the next 5 years to generate growth in the business, and is aligned with Walmart's global goal to target zero emissions by the year 2040. Tesla first started taking reservations for their electric semi-truck at $5,000 per truck, but has recently increased that up to $20,000 per truck for a base reservation of the production version and the full $200,000 for the Founder Series version. That means that Walmart would have placed at least $2 million alone in reservations, and that the total order could be worth about $20 million. Now, the timeline for these electric semi-trucks was pushed a while ago, expected to be coming out in 2021, but in a recently leaked email from Elon Musk this June, he stated that it is time to bring the Tesla semi-truck to volume productions. So no exact update on that timeline, but we should hopefully see these trucks rolling out soon. In a press release, Walmart cites the following sustainability and safety features as key highlights on the new Tesla semi-electric trucks, saying that they consume less than 2 kilowatt hours of energy per mile at the gross vehicle weight and highway speed, significantly reducing operating costs per mile compared to diesel, and that their 500-mile range allows a driver to go to their destination and back without recharging. The trucks are capable of 0 to 60 miles per hour in 20 seconds with a full 80,000-pound load, and can climb 5% grades at a steady 65 miles per hour. Now that is compared to 45 miles per hour for the same grade in a diesel truck. Now the regenerative braking technology also recovers 98% of kinetic energy to the battery, and with other features like the vehicle cameras and sensors aiding, it helps keep the drivers very safe. Okay, now let's chat about some exciting new partnerships and deals for Tesla surrounding batteries and lithium. Starting with the fact that on Monday, Tesla signed a 5-year deal with Piedmont Lithium to supply high-purity lithium ore mineral to the U.S. electric car maker, prompting an 83% surge in the Australian's lithium miners' shares. Now, this initial 5-year agreement implies that Piedmont will supply about a third of its planned 160,000 tons per year spodumene concentrate produce from its deposits in North Carolina. Both companies have an option to extend the deal for another 5 years. Piedmont President and Chief Executive Officer Keith Phillips said the deal represented the start of the first domestic lithium supply chain in the United States. We will now accelerate our mine/concentrator development to support Tesla's plans, work to further and expand our mineral resources, and potentially increase our planned annual spodumene concentrate production capacity, he said. The deal is conditional upon both companies agreeing to start deliveries between July 2022 and 2023. So this is an exciting part of Tesla's new battery supply strategy. But what is also exciting is that Tesla themselves are getting into the lithium mining. So they announced a claim on over 10,000 acres in Nevada and stated that they are coming out with their own lithium processing method. This new process that they are pioneering is going to be sulfate-free and skip the intermediate. And this will result in a 33% decrease in their lithium production costs. Now, one more piece of battery news, guys, and that is the fact that Tesla may be looking to take a 10% stake in a battery maker, LG Chem. The Korean technology giant builds batteries under its LG Chem division right now, though it announced earlier this month it'll spin off its battery business to create a new company, LG Energy Solutions. The company did not immediately return the request for comment on the potential Tesla stake, but the car maker is reportedly interested in as much as a 10% stake in the newly created division, which would help it secure a supply of batteries with little risk for the foreseeable future. One source said it's not clear if Tesla's endgame is an all-out acquisition of LG Energy Solutions, but one source said that it does make sense, as the carmaker continuously looks at ways to cut production costs for its EVs. Last week, Elon Musk said during the Battery Day presentation that cheaper batteries and breakthroughs should allow the automaker to build a $25,000 electric car, potentially within the next 3 years. As of right now, Tesla works with LG plus 2 other suppliers for their vehicle batteries. The 2 others being Panasonic, who works with them out of Nevada, and over in China they work with CAT-L. Now, LG Chem is a major supplier of electric vehicle batteries to several automakers, with the 2 most notable being Tesla and also GM. Now, I am taking a small detour from Tesla here just because I find this piece of information too interesting to not include, and that is that LG Chem supplies the batteries and some different systems for GM's Chevrolet Bolt. But the 2 companies are also engaged in a joint venture to build a new battery factory in Lordstown, Ohio. This factory will be capable of churning out more than 30 gigawatt hours worth of battery production annually, which is nearly as much as Tesla's own Gigafactory 1 in Nevada. As GM explained, it'll take a 50% interest in the new venture, anteing up at least half of the project's $2.3 billion cost, and is planning to start construction of the plant in mid-2020. Once production is underway, the new plant will begin supplying batteries for the battery electric trucks produced at the former GM manufacturing complex in Lordstown, sold to Lordstown Motors Corporation last month. Later production will also supply GM's next generation of battery electric vehicles, including their all-new battery electric truck coming in the fall of 2021. So yes, sorry, a little sidestep from Tesla there, but I just thought it was too interesting to see the connections and the steps that GM is taking in making EV batteries. But yes, to sum all of that up, Tesla is definitely taking some notable steps in securing the future of their EV battery production. As the demand for EV vehicles grow, I think Tesla is setting themselves up nicely to be able to have the supply to meet that new demand. Okay, so I know that was a lot of updates, but I think basically it helps reinstate that positive long-term outlook for Tesla as a whole. I know for myself, I continue to have a very bullish outlook on Tesla for the long term. There is a lot of exciting potential ahead for Tesla, plus the EV industry as a whole, and we're seeing a lot of major competitors start to come in with their versions of electric vehicles. So please let me know your thoughts on this. What are you thinking about Tesla right now, plus some of the other companies in this arena? You guys know I always love hearing from you, so make sure you leave a comment down below. If you made it all the way to the end of the video, you better give us a big thumbs up and make sure that you're subscribed to the channel too. Thank you guys so much for watching. I hope you have an awesome day, and cheers!